Welcome, fellow investors. This video, another suggestion by a subscriber. We are going to have a look at Kogan. Kogan's been very interesting. I've kind of lost touch with this stock over the past few years. Last time I checked in, it was sort of around that $4 to $5 mark, and it is certainly not that now. So we're going to be applying the methodology of having a look at the price to earnings ratio, the earnings per share, and coming up with roughly a price target or valuation within the next 12 months. Just a disclaimer about this particular stock, we're looking at a market cap of about 300 mil. So this formula works much better for larger stocks, but it still gives us a loose framework to understand where this stock might be headed over the next 12 months. As with all my videos, this isn't advice. This is just information and a bit of education as well. I'm not trying to persuade you to buy Kogan or not. I have no influence around whether you do that. So if it's something you want to do, make sure you do your own research, talk to a financial advisor before making any trades. So with all the videos, first thing we need to be doing is looking at the price to earnings ratio. But if you've seen this before, you know I'm using Simply Wall Street. Really cool platform that provides analysis of stocks. And I always get caught up with this part here, discounted cash flow. Maybe I'll do a video on how to calculate discounted cash flow later on, or maybe not. It's pretty boring and a lot of mathematical equations behind it. But they're saying it's a fair value of $7.29 and current price of about $3. So really interesting using that approach. I'm not sure if it's ever been that high before. I can't recall. Haven't touched base with it for a while, but we are going down and it's coming up and talking about the price to sales ratio, which is when it does that, it means that it's not actually earning any money. And we go to the historical price to earnings over the last 5 years. And yeah, we've got a period here in 2021 where we're kind of pushing 350 times earnings and a low of 48 until we go up here with a massive spike of 5,000 times earnings. I can tell you right now, we're not using that number for calculating what the price will be in the future. It comes back down to 400. So that's what makes it difficult about the smaller cap stocks. Is investors are willing to pay a bit more, hopefully, with the hope of turning into profit for the long term. But what I'm going to do is I'm going to see if we can pick up the price to earnings ratio for the industry, which we can see there. Industry average is 19.5. So I think that's going to give us a really good ballpark sort of average we can use to plug into our data. So we're just going to put price to earnings of 19.5 because those other numbers honestly too crazy for our calculations. So 19.5 is our average price to earnings ratio. And then what we want to do is flip back and have a look at what the earnings per share forecast is going to be, assuming that there is going to be some kind of earnings in the future. Although this looks good, 50% earnings growth rate. And we're looking here, these are just total figures. So we're still losing $18 million, and it's not till they turn a slight profit. Interesting this year, but we go down to the actual earnings per share. That was just the earnings in general. And we can see that it's zero, but we're going to 30th of June 2026. We've got 5 analysts. We'd like that closer to double figures, but again, that's one of the challenges with the smaller cap stocks. They don't get as much attention, but they're predicting somewhere between 16 cents and 22 cents per share or earnings per share, with the average coming in at 18 cents or 18.3 cents. So that gives us, actually, before we do that, they're forecast to go to 24 cents in 2027. And then even moving on beyond that, they've still got 5 analysts saying it's going to go to 30 cents per share. But let's stick with this one. I might do the other one in a second. But earnings per share, let's go 18 cents for the simplicity of maths. So we go back to our sheet here. Earnings per share is 0.18 cents. I'll put the C in there because it just feels a bit better. And let's pull up the calculator and see what this does for us. So going the average price to earnings ratio, 19.5, and we multiply that by 0.18 cents. And that gives us $3.51 is a share price. So it'd be really interesting to see where that stands. And again, we're just going off the average because we don't have a lot of data for this company. $3.51 average share price, which is above the current price we'd seen earlier. We'd seen it at 2.99, and I might jump over and just pull up Google Finance. So 2.99 per share. We got 3.51 as a target. So been as high as $6.20 earlier this year in January, and it has just gradually gone down. Massive decrease over a period of time, and we can see the year range has gone from $2.98 to $6.37. So $3.51 seems very, very doable based on that analysis. But again, that smaller cap, just makes it a bit more flimsy. But what I'm going to do, only because I'm very, very interested, is let's have a look at the 2027 earnings per share of 24 cents. And let's plug that into the calculator. So earnings per share, if it does grow to this amount, it'll be yeah, it could make it a bit more appetizing to buy, because at the moment, buying it at 3 with the potential to go to 3.50, not a huge upside. It is, you can do it in a day or so. But let's go here. We've got 19.5 earnings per share multiplied by 0.24 cents in our earnings per share, and that gives us $4.68. So $4.68 for 2027. And again, that was done by five analysts. So potentially that sort of longer term hold, if that's giving you any more confidence at all. And if we're coming in at that $3 mark and it goes up by, sort of $1.60, you're banking over 50% profit on that trade if it goes up to that amount. And that is the fun of all of this, is if the analysts are correct, if the price to earnings ratio stays at that 19.5, that industry average, we come up with these figures. So don't usually do this, but because we needed a bit more information, we're somewhere between $3.50 and $4.68 in the next 12 to 24 months. That is my coverage of Kogan. As always, comment below if you want me to pick up any other stocks. Ideally, they are hitting market caps in the billions. It just makes it a bit more accurate. But if the company's popular enough and there is some kind of earnings there, then I'm always happy to do that as well.